All right, so we are back on the show for a special episode this week. We have Troy and Matt from Option Omega. I know if you follow my channel or any of my stuff, I pretty much have Option Omega up all the time. So it's cool to get the guys who helped build it, who actually built it on to kind of discuss backtesting in general. And maybe we can go over a couple strategies if we have time. So Troy and Matt, and we got Brian here as well. Welcome to the show, guys. How's it going?
It's going great.
Going good.
Doing
Awesome.
well.
Yeah, I know we kind of coming off a 3-day weekend and the market is basically tanking in the moment. So I don't know what kind of positions you were in last week. I know I have a couple trades last week that were sucking wind. And the funny thing is one of the trades when the market was actually one of the trades we took last week when the market was actually down, I actually feel better about entering new trades on pullbacks versus like longing the top. But I did quasi long the top last week, so I am kind of paying for that one today. But anyway, so yeah, I think it would be helpful to start with a little bit of backstory with you guys, like how you got into options trading and what sort of compelled you to create Option Omega, and maybe just a real brief overview of what Option Omega is today, because it's not quite what it was, I don't know, a year or so ago. It's a lot better, obviously. But yeah, let me hand it over to you guys and educate our listeners on Option Omega, because I think some of them haven't seen it before and or maybe used it before. So yeah.
Oh, no, I appreciate you having us. As a side note, Eric was one of the first people that we demoed it to. Actually, just internally, Tammy Chambliss and Eric were the first, I think, two demos.
Wow, she's like famous.
Well, you're
So are
famous too
you?
Am I
book,
famous?
yeah, in our book.
Rock
And so-
stars.
Rock stars. We went straight to the rock stars, and Eric was really nice. As I say, really sweet, but that's very kind to give feedback and provide a lot of really good early feedback for us. And so now we launched in 2022, and just I'll give you my kind of quick version, and Matt has his side of it too, which is fun. But the other partner, Rusty, and I were developers together for about a decade, and I got into options same time he did and started learning as we went. And since we're engineers by nature, we kind of wanted to be methodical. So we looked up the idea of backtesting, and we found a backtester, and we found the strategy that was going to make us like $1 zillion the first year. And it was I still remember the trade, and I traded it in real life, and the numbers were just completely different than the backtester. And
Right.
what we realized is they were using end of day data. And what that means is they were taking a snapshot of the options prices at 350, and whatever the price was, that was the price for their model for what options were for that day. And
Right.
anybody who's traded options for 5 seconds knows that that's not going to work
Yeah.
in real life. And so we sought out to kind of solve that issue, and it was a difficult issue to solve, but we think we did it. And along the way, we had people ask us, say, like, hey, you should make that public because that would be a useful tool. And so we went down the road doing that, and that required starting a business that, Rusty and I as developers that's not our forte, but it is someone we know's forte, introducing Mr. Matt Simon. So Matt, I'll hand it to you.
Well, I haven't it's not like I've started a ton of businesses, but I did have some unrelated small business experience, but I got basically my story is I got into trading options in January of 2020. Do you guys remember anything about January 2020? At the end of the month, I remember
Was that yeah?
so
When,
I
when was
actually
when was the big drop? Was it February?
it was
Oh yes, you
March. It
got
was the
in
middle of March.
Okay.
So it was actually the best time to learn about options. It probably ever, because there are things where you just go in completely ignorant, and it can be a great way to learn. And what happened was I was just buying directional puts and calls. And at the time, SPY was like 330, 350. Sometime it was at an all-time high. And actually remember I had puts on Boeing, and Boeing was at like 3 something. And then Boeing went below 90. Like they were having their own issues and then COVID happened. And I just remember looking at my puts, which were like 300 puts or something. And it was like each put would have been worth like 20 grand had I bought 6 month puts instead of 6 week puts or whatever, you know.
Yeah.
But it was a great time to learn about options. And so I started trading pretty seriously in January of 2020. And then in in 2020, kind of end of 2021, we started talking about doing OO, and we launched the backtester in March of 2022. And then automation platform took a while to build. We basically started using it a year ago and then publicly launched it this spring. So we have right now a backtesting tool and then a tool to automate those backtests. But it's been great. We have a great community, a lot of people doing 0DT, SPX, and everything under the sun. So yeah.
Yeah, it's been fun to watch you guys kind of grow that community because you guys are pretty. We've had a lot of down to earth conversations, and I really it's interesting when you have retail, like true retail people like us approaching stuff like this, where you kind of for better or for worse, you kind of aren't what's the word? I don't want to say jaded, but like all the, if you go read, what's the book? Sheldon Nattenberg's options, whatever book. It's like the Bible of options. Like now it's like, I have no use, not no use for it, but like, it's just totally outside the scope of anything I even consider. And I want to go back to something that Troy said, because I think this is really important. The idea of intraday options pricing, because right before you guys came to me, I had with another buddy in our local group. He was a data guy, and we built our own options backtester with 5 minute data because we were trying to solve the same problem. Like, would I have hit my profit target at noon because the market rallied up during the day, but then it rolled over and then you didn't get you didn't hit the profit target. So it was those type of questions. So I was going to ask you guys, like, I think it was in 2022 when they started adding Tuesday and Thursday expirations, like,
Yep.
middle of the year, that type of thing. So how much of it was that kind of evolving landscape for you? Because, if you were doing, loosely called tasty trade style options of 45, 60 days, stuff like end of day data is not horrible, right? But were you guys trying to, like, did you think about you were trying to solve that problem more for shorter durations? Because that's kind of what I'm always trying to do is like, I want to get as many, trade small, trade often, that kind of thing. And you can do that now because there's so many expirations, but back then there wasn't. So did you guys kind of see that coming? And did that factor into, hey, maybe we should build this thing because it will be more useful? Or what were you guys thinking about when they started adding more expirations?
We were very, very pleased when they added more expirations.
Yeah.
I would say Matt can speak to it more. I think it was a stroke of luck a little bit. I mean, we were lucky in the sense that we launched, I think 2 months, Matt, before
Like around 2 months. And
Mm,
we didn't plan that out. It was just
yeah.
when it was
No.
ready.
But you could see it heading in that direction. I mean, you could
Yeah.
see people doing 1 DTE trades, 2 DT trades, things like that, setting up Monday trades for Wednesday, setting up Wednesday trades for Friday, things like that. And so you could see, and it's kind of borne out. I mean, we went to the options industry conference last year, and I mean, 0 day just dominates the market now. I mean,
Yeah.
everyone's hedging for 0 day. But to that point, I mean, I think even I understand, like if you're doing a 90-day condor, does 10 points matter? No, but it does matter in the sense of stops and things like that with vol, because
Mhm.
I remember early on when we first launched that one of the first couple of weeks, this is one of the first videos I did. where we had like a 220 point move in the SPX intraday, and we closed unched. And the video was talking about like if you were using end of day data, you would have been like, and you looked at it like, oh, quiet day in the market. Like, no, it wasn't a quiet day in the market. It's like one of the craziest days in history in the market.
Yeah.
And
Yeah, it's like
so
the equivalent of looking at like a line chart and a candlestick, because like a line
that's
chart,
right.
you just get the
That's
one
right.
dot, it's like a mountain or whatever. So yeah,
Yeah. But and so like if you have a stop based on vol, or if you're doing something a little bit more complex, you 100% probably got stopped out that day. Like
right.
it is what it is. And um so I think it does matter. Now there are people who have like asked for like tick level stuff on options. There's a fine line between, there's a balance of it. Like you can get, in
Mm,
my mind, too granular with options because
yeah.
it's not futures. It's not that clean. There's a lot of pricing going in. There's a lot of stuff in real time happening. So we think 1 minute data is a good balance of that.
Yeah,
Yeah.
and we have intraminute data as well. I mean, the biggest thing that people use intermittent data for is stop losses. So especially with automation. So we have intermittent stop loss and zero DTE on SPX and on SPY in the backtester. And then that's what a lot of people use to backtest the various types of stops that you can do in the automation platform, like broker resting stops, which are for people doing zero DT spread selling is probably the most common way that people actually automate their strategies is with a broker resting stop on a single leg. So, I mean, you can get extremely granular. So,
Yeah. One of the it just reminded me, one of the things um that when we built our own backtester way back when was kind of struggling with because we were trying to do zero DTE back test. It was Monday, Wednesday, Friday only, and the volume wasn't near what it is now. I mean, it's literally like billions expiring every day. And so what we would see sometimes in our 5 minute data is a lot of sort of theoretical pricing that the CBOE had. So now with the volume as it is, I would imagine that the 1 minute pricing is actually more accurate now because it's actually data that's traded versus like, I mean, you think about like all the strikes, right? If you look at the option chain and there's whatever 100 strikes around the money, not every single one of those strikes is trading at the time.
sure.
Maybe it is now. I don't know. It's possible now. So what the data provider would have to do, this is my sort of take on it, is they would have to approximate, what this option would be, even though nothing traded in that 5 minute block. And so we would get like, to your point earlier, Troy, it was like, oh, zero DTE at 10 a.m. made $1 million, but at 10:05 it didn't. Right, it lost $50, and you're like, well, what was that? And you would go back in and find it like, oh, I'm not going to receive $1 million credit for a single spread or whatever. It was real dirty back then, but I would imagine, the volume that you have now that it's the especially if you're doing 1 minute, it's probably way more accurate. Have you
Yeah, I mean, I'll just tell you that the expectation, I've probably had 50 conversations with people where they're doing zero DTE stuff and they're asking about a 5 cent difference. So, like, the
yeah,
expectation is that it's going to be exact. So, here's the
yeah,
thing backtesting is it's a simulation. It's backward looking. It's not a live auction, which is what trading is. That being said, I think in those 50 issues or however many, I don't think there was a single time where it wasn't, hey, you needed 5 cent slippage on this, you know?
right,
And so
yeah,
there's so much in the back tester. Number one, the point about liquidity is a general point. We get asked all the time, hey, can you add blank ticker? And you'll go look at the ticker and be like, dude, there's nobody trading options on this. This has 7,000 volume across the entire options chain. It's
yeah,
like I don't know what it is. I'm not looking at it, but I'm guessing like the QQQ strikes, like the at the money calls have probably traded 500,000 options today.
right,
I mean, so we only backtest tickers that are usually all in the top 10. And we always have the top three, four, five most active tickers, except on maybe an NVIDIA earnings day. We have very liquid tickers because There's so many ways in the back test with the various features of the Punisher and slippage to, uh, to build a rigorous and robust back test that people can trust. And,
I love the Punisher term, right?
yeah, that's Troy.
It cracks me up
That's
every
Troy's.
time. Yeah. Sorry. I gotta, I
He
gotta
loves it
smirk
too.
with,
I love
it's
to
fun.
destroy worlds.
Yeah.
That's one of
Yeah.
my favorite. Yeah.
For, for the people who don't know what the Punisher is. So and the community is crazy. Just community in general is, and I think it's good because it's a little bit of, um, kind of a checks and balances, if you will, where people might say, "Hey, look at this back test; it made $1 million," and then people will kind of add different parameters or settings that sort of you know don't favor. How should I say it? They usually reduce the performance, which is kind of like maybe worst case scenarios are being applied
It's just more
with
robust and more rigorous. You
robust.
know,
Yeah, so it's funny. The Punisher is I love that term that you guys use over there.
People will come in a lot of times with back tests, and they don't have slippage built in. That's like a basic level of it. And so what
Yeah,
the Punisher does is basically just try to make it as realistic as possible. Um, people, I mean, the thing with financial data in general is people go. I think your point about community is funny because people kind of go ham on that stuff.
mm,
Um, but I like the community in the sense that you're not, if you go into like Option Mega Discord, no one's going to try to convince you you're about to get rich quick. And I'm
yeah,
thankful for that. And your
yeah,
community's like that too.
yeah.
Like you
yeah,
guys,
yeah,
We're the
yeah. No,
anti-hype
that's
hype
not a
yeah,
thing.
thing.
yeah,
Well, and
exactly.
it's sad because you go on and you see these YouTube videos or a Reddit thread, and it'll be 3 million people. Let me copy your strategy, and it's like, dude,
Yeah.
this is clickbait. This is not real life. So
Do you find that uh most strategies that people are sharing or coming up with in your community are sort of net selling options like condors? Yeah, I mean, theta, more theta trades,
I
maybe not
think,
selling, but as a because the get rich quick guys are tend to they want to buy out of the money, the lottery
right,
ticket, and I don't really I've back tested it. Trust me,
yeah,
I tried to back test that and it just isn't it,
yeah,
but are
doesn't generally
most
work.
strategies more like theta based, like time based?
I mean, my perception, and we don't, this is anecdotal, but from me working in the Discord every day for 3 years, is that I think the most common thing is zero DT spread selling, credit selling iron condors all day long,
Mm,
and a lot of those people are very particular about their parameters, and so they don't want to get crowded on a trade because it's zero DT spread selling, and
mm,
there's people that will just follow it. That's probably the most common thing, but we have a lot of debit trades as well, and
really?
a lot of time spreads, which are typically set up as debit trades, and a lot of I mean, there's everything under the sun. There's people that do butterflies. There's people that do broken wing stuff. So there's a little bit of everything. I think you're right, though. In general, retail is, this idea of like the unsophisticated retail trader, or like the Wall Street best bets person who's buying out of the money calls on Open Door and Palantir. Like that's a big part of the options market. That's not what our community is necessarily about. We have what I would call very sophisticated retail traders who are treating this professionally, and tracking their results. Some of them are doing it as a job for themselves. A lot of them are doing it full time with another job, like an engineer working and they've got two screens set up and they're in it all day. So, Troy, what do
Yeah.
you think?
Yeah, I mean, no, I think everybody, to your point you said earlier, like we're all just retail traders. And so like, and we're retail traders that we're not the benefit, I mean, just from a business standpoint, the benefit of having a back tester as the tool or automation as the tool is we don't have to sit here and tell you how good of traders we are. And I think that kind of bleeds through into the community. Like your job, Eric, is much harder because I think you have to win and you do.
Mhm.
And I think that's shout out to you. Like
Thanks.
Matt, and I don't know how many times we've said like, man, Eric just crushes. Eric just crushes.
Yes.
And he's like, we at least once a month we'll be sitting there and Matt be like, hey, did you see his thing? Eric just crushes. And I think that's a much harder
I-
job.
I'm
Our
not
job
crushing
is,
today.
well, no
So
one, yeah, no, that's, I don't believe people that say they're crushing today, or, that's the
yeah,
general sense of it. But
yeah.
I
Thank you.
don't, so for us, our thing is the validity of data, and we can show you trades that we kind of do, and we can show you trades that, but, Rusty, Matt, and I, none of us are sitting here saying we're Warren Buffett or we're traders. And so our Discord, I think our community reflects that we're all just people trying to figure out how to trade well and not let emotions get in the way and all that stuff.
Yeah, I think it would be cool if we maybe put a back test on the screen and maybe walk through some of the components and the output that you guys have. If yeah, we'll get you to share, Matt. And a lot of people talk about win rate, and I'm more and more win rate. It's like it does matter, but it doesn't matter. And I think one of the reasons why the backtesting platform is so important is because you can actually adjust the trade. And the simplest thing is like, well, if you want a higher win rate, you might sell farther out of the money. But what is that going to do to the other components, such as like your average winner, your average loser, that type of thing? So let's walk. You guys walk us through
Yeah,
this trade and maybe kind of explain or show
sure.
as if I've never seen this before. The strikes and whatnot. Looks
Yeah,
pretty
I'll
good
hit a
though.
couple different things on this. So this
Sure.
is from this is a long published back test in our academy. We have an academy. Actually, Eric's done some great content in our academy, but it's a separate site with Option Omega, and it has some paid classes. It also has some free classes. This is from a free class that we did called Build a Backtest Portfolio, and it's a reverse iron condor. I'm gonna make a couple points. So the first thing, I'll just talk through it. So this is a back test, and I just took it from the class from one of my old save links. So it's not updated, and that's part of the story. It's from June of last year for 5 years, and it did pretty well with the exception of the first year. But it's on VIX down days at 9:32. So VIX, when I say down day, we're measuring the previous trading days close at like 4:15 to the current day's open at 9:31 or whenever the first tick of VIX is. Okay. So it's trading how somebody would like intuitively trade the VIX. Like VIX closed here on the previous trading day. Here's what it's doing now. Is it up or down? And for years, this was, as you can see, this was a pretty good signal. What happens if we run it year to date? It it has not been as good of a signal. And you can see that, a capture rate of 2%. And this is just buying a 50 delta 30 wide call spread. And it's buying a 30 delta 30 wide put spread at 932. And as you can see, it did pretty well through the first part of the year. And then, since then, it's just kind of been gross. And what we're going to do with this is we're going to take this and we're going to do something else to give it a little bit more of a signal. And we're going to only enter it on days when VIX moves down during the day. So we'll just do 1%. And then we're going to also give it a time window to operate in. So we'll do that same 932. And we're going to let's give it, it's defaulted in for 3 hours. Let's just do that. So what this is going to do, it's going to take a little bit longer to run because it's going to check the option chain every single minute. And so what it's going to do is it didn't take that long. What it's going to do is enter only when two things have happened. The VIX overnight is down and the VIX crushes 1% during the day. So you can see what happens is a lot of times it'll still be pretty early in the morning, but if we had entered exactly at 9:32, it would not have picked that up. So you can see all these different times, and it looks night and day, doesn't it?
Yeah.
Like, and so we can do. Let's just run this since dailies, and we'll take a look at it. but you win 2/3 out of the time, and your winners are just a little bit bigger than your losers. And so that's a good that's a good
Yeah.
equation. Like you win 2/3 out of the time with bigger winners than your losers. Yeah. And so now look at it over since dailies. And we can run it back full. The other one was through 2020, but this is taking us back since dailies. And as you can see, I mean, that's a pretty nice looking graph. And so
Yeah.
the trick with this though is this is the type of strategy. If you were trying to trade this manually, this would be tough because you have to set up the trade. And then if you were just going to do it at 9:32, whether VIX is open or down, there's no exit. This is a ride or die. So your risk is
Mhm.
your debit. But with automation, this is trivial because now the OO platform just checks it every minute. Once your first condition's met, it'll just check it every minute. And if it enters, it enters. This has
Yeah.
250 trades over, you know, we're in year 4 here. So I think there's a question: what sample size is considered significant for back tests? I think 250 is great. The more, the better is the answer. Uh, and this is a much longer conversation about how people back test. I'm answering this as somebody who's just mechanically back testing it, mechanically trading it, and not making any manual adjustments.
Eh,
So
Yeah.
there are
um,
people who are back testing over a shorter time frame who are using the back test more as like an idea validator rather than a mechanical thing that they're just going to automate and then trust and not put their hands on the wheel at all. So
Eric,
Yeah.
this is, I mean, philosophically, for a second, this is a Rick. I mean, this is a reverse iron condor. Uh, have you noticed do people trade reverse iron condors in your community? Is this something the
In
reason
my community,
yeah, the reason I ask is I have a thought about Ricks in general with backtesting and automation. But I'd love to hear just like what you guys do or don't do. Cause I know there's places they're like, that sounds cool. I will never do that ever.
well, so short answer, no, we don't. I've never talked about a reverse iron condor at any level. I've seen it in your community, and I've done some of my own back tests to see if maybe that would work with some of my other strategies. Because I think like and there's so many things that came up here. So first of all, the sample size, right? Um, my like the strategies I tend to focus on, like I consider cash a position. So if I test a strategy over for a given day, let's say it's a Monday 1 DTE, I'm only going to get 50 per year if it triggers every week. It typically doesn't trigger every week. So I may not get 100 trades over 3 years for my Monday trade. And so for me, the if you're using filters, which basically that's what you guys offer inside of the backtest, it's like, should you trade this every minute of the day forever? And the answer is no. Well, should I trade it at this time? Maybe. Trade it at this time with a moving average like this? Maybe, maybe not. Maybe, take profit here. So you have all these, filters and things that you kind of throw on it. But the other thing I think is it's important for people to understand um, the idea of you're trying to capture profit and not premium capture might be the right word, but if you don't understand how the structure works, like a reverse to me, like a I do a lot of credit spreads. That's mainly what I do. Credit spread is a structure. It's not a strategy. Like a reverse iron condor is a structure, but it's not a strategy. You
mm-hmm.
need to know when, because I think ultimately like I guess one of the things that people maybe struggle with or they first kind of latch onto is the idea of probabilities, option probabilities. What's the probability of this winning? And we know that or I should say I believe you cannot make money purely on what the option probabilities are telling you. Like if you just sell a delta 20 credit spread,
Right.
both sides, condor, whatever, you will lose money guaranteed over a period of time.
Yeah.
And so, so for the reverse, I don't know if I answered your question, but for the reverse iron condor, for me, I like there's some conflicting information internally for me about that where I have learned I associate iron condors with small winners and big losers, or you have to roll or adjust. And so now you're telling me reverse iron condor, which I kind of get what that means. It means it has to move out, right? Like it
Yeah.
has to
Yeah.
move somewhere.
You got to move.
But the idea of the winners and losers being close together or in size is really intriguing because I didn't know that. Like I didn't realize that until just now.
Well,
And so the way I would approach this is like, okay, you posted the back test in the thing. So I'm going to go over there. I'm going to mess with it. But I need to put that into like a risk profile. I need to see it and kind of like visually understand it. And so, for our community, we tend to just, and when I say my community, the alpha crunching world, where we're using a little bit of price action or some moving averages, and we're basically picking a side. We're going to either be long or short via a credit spread, and we're going to be right or wrong. And we're really fixing our risk reward like a 3-2 credit spread thing. So that's what defines my edge, I think, is that combination of some real basic statistics with some real basic moving averages, and just we're gonna sell put spreads, we're gonna sell call spreads. Very simple structure. It's
yeah.
not anything complicated. So anyway, that was a roundabout way to answer your
No, I think
question. I
that
don't know if I
no,
did,
that's
but
that's perfect because I think Matt, and you can tell me with the trade log on that. What is the cost of that trade? And on the losers, like what are you losing on that trade?
Yeah, I mean, it can go to zero and it can be anywhere from 10 to 20 bucks depending on here.
Okay.
I minimize the screen. I ran it over a longer period of time just so people
Well,
can see it. And in the spirit of not being hype people, if you run it back really far, it had a couple rough years. Here's what it looks like. Recently, you're looking, paid about 20 bucks, but then just before that, it was only 10. So
well,
50, but I
what
think 15 is about normal and it
what
can
I
go
was
to
gonna
zero.
what I was gonna say with that is one of the things with backtesting we found that's interesting is, and this is where data does matter because Eric, you're 100% right. I think you have a lot of wisdom in the way you approach it. I think people they hear things when they're learning options and they say probability, it's all about probabilities. And so
mhm,
you say, I'm just gonna like a big dumb ape. I'm just gonna sell 20 Delta Condors. That's what I do.
mhm.
They're mistaking the structure for the edge. And those things are
Right,
different things. Whereas you structure things in a very simple way, like as you said, like put spreads, your edge isn't in the structure. Your edge is in the data that you're using to know when you put it on and don't put it on. A
right.
rick, a rick is actually a similar thing in that it's just a completely reverse world that people thinking about with options in the sense of most people would not say the data shows you that you could be long premium and make money in the long term. And
Yeah, I'm
they're
still
sim
processing that.
I know exactly. It really does. It does break your brain a little bit. And that's the cool thing. Just it's the cool thing about backtesting is you start to see structures combine with edges that both of those didn't seem to make a difference. But when you combine them, it's very powerful. And so
Mhm.
like a long strategy, a long gamma, long vega strategy, long short theta or long theta strategy isn't no short theta. You're not going to make money, right? We know that. Well, if you combine it with like an overnight move in the VIX, you start the data and the structure come together in beautiful ways. And that's the cool
Mhm.
thing about backtesting is, and that's why it's addictive
Yeah.
because you have to combine those two things.
Yeah, you have to I have a hard time with the VIX now because it like I don't know if it's
We,
every Monday or whatever.
yeah.
The VIX is green, the
Yeah.
market's green.
Just about most Mondays VIX is up.
I've learned too much you know, that's kind of a joke, but I've learned too much from the spot gammas of the world where they're they're so advanced that I can't hang with all of that. Some, you know, like
No,
We can't either.
you know what I'm
I get
The
saying?
that.
sharp
Like
Yeah,
guys.
100%.
and that's not a ding on them at all. That's more of a ding on me for not under like not being able to follow that in a consistent way. Um, one thing I wanted to say about why I ended up in credit spreads is because when you and Matt showed it, when you look at the debits there, um, they're not all over the place, but they're a little bit all over the place. Like you said, it might be $10, it might be $20. And so it's, you know, I landed on, I want a $2 credit for a 5 wide spread and give or take 5 or 10 cents. And that allows me to know, I define my risk, which a debit, I'm assuming these debit trades are defining your risk as well. But I can, um, if I were to trade just one contract, for example, it's more consistent for me. Where because you could say, hey, I'm going to buy a 2 week call option, Delta 50. Well, when volatility is high, that might cost you $10, and volatility is low, that might
Yep.
cost you $5. So it's like, how much do you risk per trade? If you're risking the whole thing, do I buy two contracts when the vol's low? Does that, you know what I mean? So there's a little bit of, I think that's one of the things why I've kind of stuck into credit spreads because it's just the math is even easier. Um, you know, back to the VIX, I have to really think about the VIX being down. I mean, obviously the back test is showing that that's a trade. So I got some homework to do because I'm having it's more of a mystery, isn't it? It's
Oh,
like,
it's a hundred. It's a beautiful
why does
mystery.
that work?
A hundred
Right?
percent. And I like that's how I feel about alpha crunching. I mean, alpha crunching, I have seen it clearly have an edge. Like
Mhm.
shout out for the product. But it's a simple idea in my mind. Like when you start
It's
thinking
extremely
about it,
simple. Yeah.
it's a simple, and that's the beautiful thing about options is structures don't have to be super complicated. Have, uh, I pride myself on maybe losing the most money out of the three partners doing stupid things just for the beauty of the structure. Like I get super
I've
into,
seen you're stupid and I'll one up your stupid. I'll GameStop your stupid, Troy.
yeah. Well, I love like, I mean, during Liberation Day, like that week, it's the one week that paid off for me to do stupid stuff. But like, I I look at alpha crunching, and just this is a funny story. Like, Eric and I backtested some alpha crunching stuff maybe a year and a half ago at this
Mhm.
point, and I would
Yeah.
send him these like esoteric broken wing butterflies, and he was very kind. He was like, "Oh, that's cool," and I could tell he was just like, "What the hell are you doing with this trade?" Like it was so funny to me.
Yeah. It's
Have you
probably because I didn't
considered?
understand. I didn't fully understand
Well,
um,
no, but
some of the.
I think those two things of like if you can keep both of them simple and make money, why not do that? If you
Yeah.
can keep your edge simple, the structure simple, and the edge when you trade that structure simple, you'll get a lot more. Simple is complicated in the sense of like it's nuanced, and so like a Rick, for instance, like yes, the price changes, so it's not simple in that sense, but it is simple in the sense of um the the vol is matching the pricing in that, and that's why the
Hmm.
prices are changing of that vol. And you would think in general, another options thing you're taught early on is, well, high vol, you don't want to buy it. Well, what the data shows is like vol's high for a reason.
Yeah.
Vol can be sticky.
Priced in.
It's priced in, and
Yeah.
so you kind of use that to your advantage. But I will say, as a Rick, the hardest thing I've seen for people going from credit selling to buying premium is, and why people shut off those Ricks are some of the first things people will shut off if they lose two in a row. I've seen it like happen over and over in our
Mm.
community. And the reason is they cost a lot. I mean, just like in this test, this is a $40,000 starting capital. where
Mm,
you can lose
Yeah, you
you
can
can
lose the whole thing.
you can lose 5% of your capital in one per lot,
yeah.
and so you have to be part of the knowledge of it is taking that and saying like I have to be able to size this appropriately, and that's half the
Yeah,
battle with anything.
Yeah.
it's funny because we were talking about liquidity earlier, and there's this instrument um, called XSP, which is a SIBO instrument, and it's SPY is almost 1/10 the size of SPX. It's not
Mm,
exactly 1/10 the size of SPX, and SPY is a competing product to SPX. It's the most liquid volume
yeah.
as far as single ETF options volume, all that. But SIBO has this version of a smaller sized SPX called XSP, and the liquidity is really rough compared to SPY. It's like 1/1000. Somebody asked about it the other day, and at that moment, I looked at XSP and I looked at the Qs, and it was 1/1000th of what Qs volumes were.
Yeah.
And um, the point is that like we don't backtest and we'll never backtest XSP because the liquidity isn't there. But
Yeah.
a ton of people want us to add it to the automation platform so they can do trades like this because this
Mm,
is a ride or die, and they don't necessarily want to lose $1,400 if it goes to zero, but they would be okay losing $140. And it's difficult to do a strategy like this in SPY because of the assignment. Like you
right.
want this to finish all the way in the money, and unless you have $60,000 to take assignment of a single options contract of SPY, you're if you're trading that much, you're probably trading SPX. So the point is that like the whole being okay with losing everything. Well, there's a reason why a lot of people have asked for XSP on the automation platform. So there's a question from the community: can you buy cheaper, Rick, and have an edge? Yeah, this is like to your point earlier about structure and edge. This is a structure. This is a sample Rick. There are better Ricks out here. 100%. There are every kind of iron condor you can do short and long. I mean, we're just trained to think of an iron condor as being a short, but like
Yeah.
almost more than any other trade, the spreads that you sell, which are credit spreads, have an inverse. There is a debit spread that's an inverse of that spread. Same thing with a condor. So yeah, like there's people that have ricks that are very cheap and lose 90% of the time, but when they hit, they can they might be $3, but they might be 50 wide. So
Mm,
yes, you can find, I mean, we, we have a backtester for a reason. So go crazy with it and find a setup that makes more sense to you, because that's one way to make it cheaper is find a rick that is farther out of the money and loses more frequently. But when it hits bigger and it costs you less to get in. So just like Skittles, there's a million flavors of a rick or a short condor for that matter.
yeah. It's interesting. I'm sitting here and thinking about this is a 0 day trade you're showing, and the sample size is huge. To me, it's huge. It's big. And I think the frequency is what ultimately we're all after. And so if you want to trade every day, and I think this is where like I may or may not get into a trade today because the market's down and our settings aren't, or our parameters aren't there.
Smarter than me. Smarter than me.
And so I probably I mean, I have the automations on. I don't think they're going to get filled. Right. So I'm okay with not taking a new trade today. Um, and I'm sure in this situation, 200 something trades, when the VIX doesn't move down, there's a bunch of days where you also wouldn't take the trade. I
Right.
don't know how many days are,
Right.
there's
One, I
200
just,
trade what 200 trading days a year. So this is 3 years. So this is still only trading what I'm guessing a third of the time.
and I just took Monday off because to your point, Monday's almost always green VIX, which would negate this trade, and it barely
Yeah.
changed the number. I mean, I took
Yeah.
off a fifth of the days and the number went down by like less than 10%. So Monday it's
Yeah.
rare, and Mondays aren't traditionally, at least for this back test, haven't been good. So I've just done a couple of iterations while we're talking, just so people don't have to watch our faces the whole time. But this
Yeah.
one has just one contract per trade, which there's pros and cons to backtesting that way. And
Yeah. You
I
probably got
took off
to, I mean,
Monday.
I would ignore the Kager and,
Yeah.
you know, but but there is benefits to the one contract per trade because you can just, I think most people, that's what they're going to do anyway. Because especially because if you're back testing it, you're obviously still probably learning that or new to that, and you kind of want to ease into it. So I think that's a good starting point.
Well, a lot of people back test at one contract. The argument for it is that it kind of smooths out your biases a little bit. So you have less recency bias if you have a contract cap on. The argument against it is that it smooths out your drawdowns. And so if you really want to feel the drawdown, and we used to, we talk about this all the time on the OO show,
Hmm.
um, that the higher allocations, even if you don't trade at that, running the back test at that will give you more exposure to what a drawdown, what the drawdowns could be. Especially if it's a trade like this that can go to zero and you can have sequential drawdowns where there's several in a row that your trade goes to zero. Like, what does that drawdown do? Well, you're not going to see that as well when you have the backtest capped at one contract per trade. So there's
Yeah,
different ways to
there's a
slice
lot
the
of
number.
there, and this, you know, I've yet to see kind of like I don't know what the best way is. So there's all these components, right? There's like if we were to get a new person who is like, hey, I heard about SPX, I want to get started, and I know I should backtest first. It's like my initial thought in this moment is like, okay, the simplest one is to probably do a credit spread. I still would do spread as opposed to a single option because of the risk and blah blah blah. But then it's like, okay, do you got to make sure they understand that structure and then say, okay, what are you able to execute? Like how are you going to um how are you going to know? For example, like the VIX down thing. To me, and this kind of gets into like we're kind of on this cusp of like um manual trading, automation, and for until recently, until you guys put out your automation, I would backtest stuff like this, and I would say, I can't trade it. I'm not going to trade this. So I'm not going to get to the point of, well, how did it drawdowns do in 2023 when I'm allocating 5%? Like that to me is kind of like the end of the spectrum of whatever. So that's why I was kind of like, if you're new and you're like, okay, how does this feel? Like how does it feel to put this on for 2 months? And then if I wanted to scale, I mean, it's good to see. Obviously, I'm not saying you shouldn't do it in an allocation or whatever, but you kind of want to see that. Um, but there's kind of this like, and I created an automation this week that I probably would have never done before because I I didn't want to watch the screen all day. And so you put like a time window in your thing that's like from 9:30 to 12:30. If the VIX moves down 1%, well, how the hell am I gonna like? It's like a trailing stop. How do I know when that's going to be? So I need that automation to execute
Yeah.
that. And so
Right.
there's kind of this like okay, if I want to trade this, then or now I'm willing to I'm opening my mind to more let's say complex but more technical
Right.
entry criteria and windows and minimum premium and some of these like components that I can put off onto the automation.
Oh, if the automation went away tomorrow, I couldn't trade what I'm trading now. Like not even close because
Yeah.
it's so like I manually traded opening range breakouts for a long time and I was just trying to match the back test like one to one and like tracking when the breakout was, setting an alert in trading view, making sure I entered on the minute. Then if there was an adjustment as far as like a trailing stop or a ratchet, all of which are in the back test, like that is tough. I do a lot of time spreads. A lot of time
Mhm.
spreads don't have profit targets the way that I have them set up. They have an exit for if the tent sags in a time spread, and these are way complicated, or the delta rails get exceeded. And like I traded those manually, but it's like you have to be watching your computer, even with alerts and all that setup. Like you go take, I remember I went and took a shower one time and I was like, bad time to take a shower. Like
Yeah.
that was the most expensive shower in my life. Like, what am I doing?
Yeah.
And the
I've lost money
automations just
walking my
changed that.
dogs
Yeah.
before, or
Oh,
Right.
missed out on
Right.
something
oh yeah.
or whatever.
I mean, I have 11 trades on right now, so automated, and that's low for me. A lot of stuff closed out because of the dump, the delta exits, and so I would not be able to manage these 11 trades if I hadn't
Yeah.
automated. You just there's too much criteria, too much going on to do it, and so I think automation is a game changer for that. It does allow retail traders to be more astute, more complex in their
Mhm.
trades. Whereas before you just can't do it. I mean, I'd be sitting at work developing, trying to watch Amazon's like some ratio that I created in TradingView or something like that. Like it's impossible to do it. And
Yeah.
that's just part of the game, is as we advance, that's part of trying to what we do is we want tools. Again, at our heart, we're retail traders. So like I've got stuff to do. I got young kids. So like
Mhm.
I want to be able to be in the game and still live my life.
Yeah.
And that's technology has allowed us to do that.
Yeah. Well, I've been using the automation for I guess several months now, and I've been doing more end of day stuff um, and pretty simple criteria. And for the most part, it's just like it's right on. And it it's hard. It's because you guys know I hold my stuff to expiration in most cases, or I actually I have been guilty of taking profits early because it's just been ingrained in me for a decade. But I'm actually going more to we call it HTE, hold expiration. And so it's like, where do I spend my time monitoring? I find myself doing more research, which I think is where you end up. It's like I want more research so that I can then add another automation so that I can lower my position size for each automation, and therefore you get what uh, Jim Simon's deal is like. Just have a bunch of diversified strategies, and I think that's ultimately where I'm trying to get. And it sounds like you guys have multiple automations, but the cool thing is like you can actually do that with one ticker. Like I think that's what's insane that people don't understand is you
Right.
can diversify your strategies. And something you said earlier, and I didn't even think about this, is like, having a long gamma strategy that only triggers every now and then, having a theta collecting strategy that only triggers every now and then, having price action, which kind of more on my side of is do I think it's going to close higher or lower in the next hour, day, week? And if you just kind of risk the smallest amount you can for each one and you just let that go, I think that's probably those should help offset some of those drawdowns as opposed to just looking at like when you just look at one single back test, you're like, oh, well, this had a big drawdown. And you're like, yeah, but is that the only, like, realistically, is that the only thing you're going to do? And so that's kind of some of the things we
It,
think about. And
and I think, like for me, like I have a bunch of tests that are automated and you think about them as independent beings. And obviously you run portfolio analysis and all that stuff, see how they do
mm,
together. But when I'm trading, I mean, one of the hardest psychological things I've ever done is like you have a straddle on, say you have a long straddle, right? And so you need movement. Well, it's very hard psychologically to then sell like a afternoon condor because you want the movement and you're actually hedging a loss. Like as soon as you do that, you're kind of locking in the loss in some ways.
mm,
With automation, I don't think about that. And it's actually paid off quite nicely in the sense of like there's days where I need movement, But then I look because I sometimes I just don't look in the afternoons at the platform, and at close I had like I have one trade that's at Friday, end of day fly. Every Friday I put an end of day fly on,
Mm.
and it just went. I mean, it wins a lot. And there's one day where I was like, I would never have put that on if I was psychologically had to click the buttons. I'd be like, I
Right.
don't want this. But it just went on and it won, and it offset some of the losses of my long positions. And there's a joy in that, just to be like, oh, crap, because you're tricking your brain. You're like forcing your brain to just be like, stop thinking. Just stop thinking for a second. You already did the thinking early on. You did the research early on.
Right.
So now don't think in time. Let the research play out.
Yeah.
And and to your time thing, that's what I want to get to. I want to get to the point where my time is less spent clicking buttons and more time researching strategies, because it's
Researching is so much fun.
it is. It's a lot more fun, and you're not losing money when you're researching. That's the joy
No,
of it.
no,
So,
it's like I actually enjoy like finding a back test that loses so much money. Like I'm like, that is crazy. And then
Oh
I'm
my
like, what if I
gosh.
do the exact
Yeah, what
opposite?
if you
And then I go
inverse
through
it?
this thing where it's like, you're just like, why is that? Like it's literally like almost the stuff that makes money is literally like the stuff that you wouldn't think would make money. So, for people who want to try you guys out, um, we're kind of coming up on the hour here, so I don't want to keep you too long. When you do start out, you can use my code SMOT, SMOT. You guys get a discount over there. Think of the worst possible trade that you think would lose money, and I guarantee you that's probably won't be as bad as you think it
Oh my
was.
gosh.
Just try it out. Just buy a call every time the moving averages cross down, and
that's
like
right.
guarantee you it's going to win more than buying that
Yeah.
put. It's
Yeah.
just like it's insane. And so,
Just inverse every idea you ever thought was smart.
yeah.
And yeah, it'll work.
And
Yeah.
then, when you get to the rationalization part of like, well, why does this work? I really need to know. And usually I don't know. Um, you could just say, well, because I didn't think so. And you just blame it on yourself that you're an idiot. And this is the opposite of what you would do. Therefore, it probably makes money. So that's how I
100%.
think. That's how I think about
100%.
it.
100%. Yep. That's
Well,
good.
God, man, I could talk to you guys all day. This
We
has been
need to,
really cool. We're gonna have you back on. I have a strategy that I'm working on, and maybe we can have you back and kind of show more about the automation and how that works.
yeah.
And then you can kind of give me your thoughts on my back test, and any more Punisher things you guys can throw at it would be cool too. So
I would love to take your really good back test and add a ratio spread to it that's like a time butterfly. That's like 80 delta, do some crazy crap that
yeah,
just makes no sense. That's one of my favorite things to do.
yeah, I'll, well, do you guys have a minute or
Matt, you good?
Yeah, I'm good.
you
Yeah, I
are?
got a couple
Okay.
more minutes.
I
Let's
didn't want to, okay. So let me pull it up here real quick. Share my screen.
I'll tell you how retail trader I am. I'm going to use the restroom while you're doing this. I'll be right back.
Sounds good. Where is it? You guys see my screen?
Yep.
Okay. So I just put this strategy in, or I should convert it. I just created an automated strategy, and basically, there's a couple components. And so this is an alpha crunching strategy, which we use the ASD, which is a newer metric. And so um, basically on the daily forecast, let me refresh this. We added this metric not too long ago because I was looking for kind of intraday strength and weakness.
Mm-hmm.
And so, like, for example, today's Tuesday, the week of September 1st. And the ASD is 51%. The chart's not loading for some reason, but basically the ASD is positive. Let me see if I can. Sometimes when you leave it idle, there we go. So the ASD basically compares the forecast to the previous 3 weeks, and It averages the previous 3 weeks. So this week's forecast in blue is greater than the average. And therefore, the ASD is actually positive. So what I was trying to do is get like a single metric for a day. So this is available on Sunday. So we knew before the week begins that today the ASD for Tuesday is positive, and we can look at Wednesday, and the ASD for Wednesday is positive. So I was, the forecast can sometimes be hard to read, and so I wanted some kind of metric that I could backtest against. So I came up with the ASD. It stands for average strength deviation, and basically compares the current week's forecast to the previous week. So I took all those dates over the past couple of years where the ASD was positive, and I put them in here. So we'll see, I'm testing specific dates for when the ASD was positive. And I'm basically looking for a put credit spread and at the money spread. And this is just one contract per trade. And I have two other bullish criteria. It needs to be above the 2-day moving average, and the 1 minute, 20-minute EMA on the 1 minute chart needs to be above the 40-minute EMA. So this is the part that I was kind of saying, that I wouldn't, even if I found this in the back test, I would never try to probably do this myself. Because that means for this particular week, the ASD is positive for Tuesday, Wednesday, Thursday, Friday. So that means every day this week, I got to sit at the computer for 5 minutes and figure this out if I should take the trade or not. So this is sort of my stepping into, okay, here's something that I probably, not that you can't trade it. I'm not saying you can't do it. It's not that complicated. But this is where I created the automation. The market is getting murdered today. So I know trade isn't going to be taken because we're below the 2-day moving average.
Yeah.
So
yeah, a little bit.
So it's not going to trigger today. But over the past, 2023, 124 trades. These are only put credit spreads, zero day at the money. I did put a minimum premium of $1.80 just because I don't want to. I try to get 3 to 2, but when you're trading in the afternoon, like you just can't get 3 to 2 on a Delta 50 because theta's really starting to kick in. This is hold to expiration. And the way I look at these numbers is like, okay, for every $300 I risk, I'm going to make $60. And this 71%, call it 72% win rate. I can live with that. It's not 50%, it's not 40%. Yeah. So this is kind of like where, 70%, 3 to 2 risk. It's kind of in my wheelhouse. I get it. If I lose, that's okay. So we can do a allocation. So and this is where you guys can give me feedback. For my allocations, I'll go with a bigger, 100K account, and like I only want to do like 1%, right? So because if I have 10 strategies like this, so basically a couple days a week, if I have multiple things going on, I might be risking 5, 6, 7%, but any given particular trade, I don't want to blow up. So I really try to look at the capital efficiency of credit spreads, which is why I always end up there. But I'm gonna have to look at that RIC stuff too. Okay, so we have the same. So here's 71%, same data here, but now 1% over the last couple of years. That 1% has made you, let's call it 9% in your account per year. Yeah. So that's the leverage I'm looking for. It's like, how little can I risk for how much I can make? And theoretically, if I had a 3% drawdown, that probably means I had 3 losers in a row, give or take.
Right.
Right. Yeah. So that's kind of how I think about it. So I'm open to you guys.
You could be long 99% SPY, 1% this options trade, and you would trounce the market because of the leverage, like the inherent leverage in options. I guess my first thought in looking this is basically there's 4 filters on it. There's a premium filter, which is kind of basically a VIX filter. Like you're just making sure the juice is worth the squeeze. And then there's the ASD filter and the SMA filter and the EMA filter. So you're
Hmm.
checking like a quick look at the market with the EMAs, still a very short term look with the SMAs, and then a longer term look with the other thing with ASD. So I guess my first question is, have you back tested needing all four of those filters? Or if you have the ASD, maybe take off the SMA. Like what does that do to the win rate and to the trade, the number of trade?
Yeah, we can take off the I just found this one perform better. Um, I think when I took off the SMA, which is the daily chart check, and just use EMA, I kind of feel like you need the EMA because ultimately you're like we're picking direction.
Right.
You're
So
adding strength to the direction. I mean, you're
Yeah.
giving more
Yeah.
yeah, I want
validity
to
to
make sure
yeah.
that the previous month. So what while that's running, what the ASD looks at is, I should back up. What the forecast looks at, it looks at 4 weeks of, let's call it Tuesdays. So it looks at the intraday action for 4 weeks of Tuesdays and says, oh, on net, we ended up hardly 1 point. So this is pretty like ick. However, compared to the previous week, that's better. So there's been an intraday seasonality cycle forecast. I don't know. There's a bunch of words you could throw here. This is how retail people talk. Um, and there's an improvement in the positivity or the of the price action. So I'm trying to sum that up in this single metric. So this is better than the up 51% means the ASD is higher. I'm sorry, this week is higher than the 3 week average. So here's the 3 weeks. And 1 week before was down here, 2 weeks before was here, four. So this is higher than the average of these three. And so that doesn't mean that this coming Tuesday is going to be bullish. It just means that Tuesday has started to be a little bit more bullish. And so I want like a, you know, lack of a better term, chart confirmation um, that the market is exhibiting that bullish behavior, and then I want to pounce on it with an aggressive credit spread. So I'm starting to use the word aggressive. I think people understand that better than, oh, I'm
Yeah.
selling a put credit spread, because they're like, whoa,
Right.
shit, you're doing at the money. Like, why not? How about a Delta 20? And so I'm like, I'm just going to start calling these aggressive spreads, and I'm
Yeah.
going to be right or wrong. So when I take the two SMA off, the win rate does drop. The expectancy a little bit lower. It's not horrible. Still made 8%. It's 187 trades. Whereas before was it this one? Oh, this one. 124 trades. So
It, can
I'm
you
actually
do
okay with trading 60 trades less. Like I
for
like that.
sure? Yeah, for sure. I I mean, when testing these things, I'm always um Eric is smarter than me, and so when he says aggressive, this is still very smart and a very conservative. He's just collecting more credit. So I'll give you my drunk Uncle Troy version of this. Could you just take the just buy the 50 delta call and take off the put spread? Because I kind of want to talk through this because I don't think this is going to perform as well. You probably just exit out, really the quickest way to do it.
Oh,
Uh, and then just yeah, add that 50 delta. So just buy the call and then yeah, make it the 50. There you go. Uh, so when you run this, I don't think it's going to work as well, but
hmm.
in my mind, this goes to part of why you're a good trader and why you run a good community.
This isn't gonna pass the
Oh, the 1%. Yeah, you got to put more
yeah.
1%. Do just one contract. just for now.
Yeah.
Oh, you'll still need to put more than 1% margin on it.
It's
Though?
got to ignore.
Oh,
Yeah.
does he? Okay.
I did. Yeah. I put the ignore.
Okay. Um, I think what makes you a good trader is like aggressive is a relative term because you can always get it much more aggressive.
Yeah.
Go do 100% allocation since you just have one on.
Yeah. Okay. Yeah. And I think the word aggressive is the structure
Right.
because
Yes.
it's aggressive for the probabilities.
Yes.
Is the
Yes.
how I would.
And this
say
actually
that.
goes in my mind to show edge how it works because your edge, Matt, you'll have to help me. What am I doing here? That's not.
Buy
Oh,
a
the min
call.
premium. Min premium.
Oh, yep.
Take-
Yeah.
Yeah. Not going to
Sorry about
receive any
that.
credit on these guys.
Yeah.
I
Yeah.
do that all the time. I
Well, you know, if
think,
this works, we're gonna have to do a call spread too and see what that looks like.
yeah.
Is it?
I think
I'll be surprised.
exactly.
Yeah.
Perfect. Okay.
I mean, it
So,
worked-ish, not
so,
really.
but this is what this shows me, and this is how edge works. Your edge isn't that it's going to go up a bunch. And there's a difference. It's a nuance, but it's important with strategy. Your edge isn't that you think there's going to be a lot of movement. Your edge is that you just think the market's stable.
Yeah.
And that's a great environment to sell put spreads in.
Yeah, that it's not going to go down a lot.
It's not
That's
going to
right.
go down.
That's right. Price is stable here. And
Yeah.
so I think that's a great example of like why structure matters with the type of edge that you have. If you have a type of edge where it's like I lose all the time, but when I win, I have like 6,000%.
Mhm.
Well, yeah, you can afford to lose a bunch. Well, your edge is that you have a pretty good understanding of when the market is stable. And so you have to match your structure accordingly, which is what you do. And so I just use that as an example to say, like, that's a good, when people say, why not just buy the call? Well, that's why. Because the
Yeah.
edge isn't that it's going to move a bunch. The edge is that you think the market's stable. And put spreads are much better for that because you're getting paid for stability.
Yeah. And to the point I made earlier, if you just want to buy an at the money call, $5, $12, $4, $5, 8, like 18, 20, 50, it's like it's hard to be consistent in size
Yeah.
when
Yes.
with single options. So
And you're,
spreads help you.
yeah. And you're not
you know,
making any money for stability when you're just long a call,
Right. Yeah, that's true. I did say I'm trading direction, but it's really non-direction. It's really just not going down in this case. It's just going to land on this side. Anyway, yeah. So there's a lot of other structures you could put here besides but I think it's just like until I can't find any more of these, I'm just going to find as many because the five wide credit spread is the smallest amount of risk from a spread selling that I
Yes.
think. No. Yes, you can buy way out of the money. For SPX, you can buy a way out of the money debit spread for $1 or a butterfly, but those aren't you can't get a 71% win rate with out of the money directional like butterflies or whatever. You can keep the risk. So to me, this is like the $300. If you can't risk $300, you probably just shouldn't trade SPX. But if you're willing, if you can start with $300, obviously this is scalable to no end. But I think that's why I just kind of land back here all the time because
and the other,
like I
that's
get
right.
it, I get it. Yeah.
And the other thing I'd say, just as sizing, we have people all the time. It's important to know with backtesting, you should backtest allocations. Like you should test different allocations. We always say allocation is a strategy. Also, it's okay just to actually automate one of these suckers. You don't have to just do
Like a
the
one
allocation.
lot.
Yeah, just
Yeah.
trade one lot. Like, and
Yeah.
I've said this for a long time on our show. Like most people honestly, if we're really being honest with ourselves, with our allocation, with the capital we have in our accounts, most people should be trading one lots on more often than not of what they're trading.
Yeah.
That's just a reality of it from a sizing perspective. Like they would
Yeah.
care less, and that would make them better traders if they just downsize their trades.
You're speaking from
Yeah.
an emotional perspective, not a financial advice perspective. Emotionally, people oversize. That's what you're saying,
Yes.
right, Troy? Okay.
Yes. Yes. And I think if you talk to someone who is allowed to give financial advice, they would say the same thing. But
Right. We are
that's
not, but yeah.
we're not. Yeah.
Yeah.
I don't think our financial advisors would be mad at me for saying
Right. Yeah.
trade
Again,
smaller.
we're the anti-hype people. You're
Yes.
not
Yeah.
you're not going to get a Lambo trading one of these.
Yes.
Yeah.
One lots.
Well, and I mean, I kind of see it as an add-on, like to your point earlier. Like I own SPY shares, right?
Yeah.
I had a relatively at the money, in the money covered call, hedged myself today. So, you know, this isn't the only thing that a lot of people do. Usually they're coming with maybe a portfolio of stocks
Sure.
or whatever.
Sure.
But I think that small percent should be where your options are, which is why some of those big wide condors, 90-day, you need a lot of capital for that, and you'll probably win, but the amount of risk you have on, it's a lot for the reward. And so, if you're selling a whatever 10 wide condor for $1 and you're trying to get 50 cents and you're risking nine, and then your commissions are going to eat out of that. So to me, it's like, where's the most meat on the bone? And it's like at the money is where the most meat on the bone is, and you still have a little bit of theta. So
100%.
yeah, and not to say that's the best way. It's just kind of where I end up with stuff. But well, this was cool, guys. I really appreciate you coming on. We definitely went over. I'm going to get this posted on all the places, but everyone should go check out Option Omega. You guys see me posting about it all the time, and this was cool. I'm going to send you guys. Um, I'll actually post it here in a minute, but I'll put the back test. Let me see this one. I got the shared link. Here it is. Oops. I'm going to put the back test for that one in here just so other people have it. Question: how do you put in your own metric into the automation? Good question. Um, I don't. So what I do is on Sunday, I came in here and I said, oh, Tuesday's ASD is positive. Wednesday's ASD is positive. I probably, now that I'm going to be doing this, need to put this in a easier way to do that. But when I created the automation, so for this week, I said, I want to trade this Tuesday, Wednesday, Thursday, Friday. And maybe you guys can chime in on this. Oh, I'm not sharing my screen, am I?
Yeah, you're just saying you used specific dates.
Yeah.
There's a specific dates field in both the backtester and the automation, and you can use it either as a whitelist or a blacklist. So you can either say, I don't want to trade it on these days, or I do want to trade it on these days. So you could have a strategy that's open
Yeah.
and just black it out, or you could have a strategy that you have on that never trades until you whitelist, until you tell it to go. So there's a couple different ways to slice the apple.
Well, yeah. So here's what I just, you can see my screen now. So the way I'm doing the ASD is a little bit different because I'm doing multiple days inside of a single automation. But on Sunday, the ASD is out for each day of the week. I went in here and said, okay, ASD is positive. So for this week, the ASD was positive for Tuesday, Wednesday, Thursday, Friday. So I went over to the automation and I have one automation, one PCS automation for the ASD. So I edited it for Tuesday, Wednesday, Thursday, Friday. So let's say next week comes up and the ASD is positive Monday, Wednesday, Friday. What I was going to do is just go in here and say, okay, I'm going to leave it enabled and I'm going to just change it to Monday, Wednesday, Friday. So I wasn't going to put dates in there. I was just going to change the date, the days of week that it changed. I'm using specific dates for the back test, but when I converted it, when I created an automation from it, I changed it to weekly, weekly with specific days. And so every Sunday I'll just go in here and change it accordingly. Either way, you got to go in here, right? And so I'd rather not type out the days. I guess that because that doesn't make it back into the back test. But
Right.
so that's how I'm doing that one.
But just to interject for a second,
Yeah.
Eric, a lot of your stuff you just do it once a week, right? You can go in and look at some of the metrics that you have and just program it on Sunday, right? Because it's a look ahead for the week ahead. No, I don't mean
so
just ASD. I just mean in general with the alpha crunching stuff.
yeah, so on alpha crunching, I go to the trade ideas, and this is posted every Sunday.
Yeah.
I don't trade the SPY call and the call debit spread, but I trade all the credit spreads. So for each one of these, like, well, Monday was Labor Day, but this trade is valid for this week. So I have a specific automation for the Monday PCS. I have one for the Tuesday, like today's Tuesday. We need the 5 needs above the 10. So this might actually trigger this afternoon. We'll see. But anyway, so then I go into here under strategies, zoom out a little bit, and I just either pause or unpause them. So let me move this out of the way. So for example, like today's Tuesday, let's see, sort by pause. So these are paused. So unpaused, I have Tuesday CCS hedge if we're above the 20, which we are not. So this won't trigger. And then I have the Tuesday PCS, which might trigger. And these are not paused. So I just go in each week and pause or unpause according to the trade ideas. But with the ASD, I don't want to create 5 ASD things here. I think that'd be too busy. So the ASD, I just did it within one, the PCS within one strategy. This one. So this one will always be not paused. And I would just simply go in and change the days of the week. So next week, if it's Monday, Wednesday, Friday, I would just change this to Monday, Wednesday, Friday. And I'm assuming that the automation would adjust to those days. That's kind of how I set it up.
Makes sense. Makes sense.
Yeah. Yeah, I thought about putting all the 7-day spreads into a single one, but they're different each week. So either way, you got to go in and either turn them on, turn them off, or tell it which days. But I can do all of this in like once the data's out, I can enable or disable whatever. I can have all this done in like 20 minutes. Like it's really not that much. I just got to remember to do it, and I got to remember to what do you call it? Authenticate the Schwab every week.
Yeah, somebody asked which brokers are supported. This automation platform supports Schwab, Tasty Trade, and Tradier.
Yeah. I've heard good things about Tradier.
It's funny. All of them have their own kind of pluses and minuses.
Mm-hmm.
And it really just depends on the day, but Tradier, their API is really good. They kind of built it for this type of thing. And so
yeah,
it works pretty well for it. Yeah.
IB is not on the docket. They don't offer a, in the US especially, they don't offer a modern API that's based on doing it over the cloud unless you're a financial advisor, which we're not. So no IB. We get asked that almost every day. Unfortunately, it's not limited to us. It's just in general.
Yeah,
so we love it. Yes, Thinkorswim is one of the 3. Thinkorswim is Schwab. Yeah.
Yeah.
Yeah. Very cool.
Man,
all right.
Thanks so much for having us. It's always fun to do this, and we need to get you on the morning show one morning, hang out with us, and talk alpha crunching a little bit.
Yeah, that would be awesome. I really enjoy that. Well, you guys
Okay.
have a good one. Thanks everybody for joining. We'll get it posted. So you guys can watch it later. I'll probably go back and watch some of it too because I want to see that Rick. I want to start messing with that. That's the thing. It's like, well, what if I did the Rick with the ASD with that, and I just get into this like
That was
crazy mode.
actually my thought as well. It'd be
Yeah.
super interesting to look at like maybe below certain, yeah, it'd be super interesting. So,
Well, what I found with some of the stuff is like a lot of my stuff, the alpha crunching stuff will reduce your number of trades
yeah,
for
right.
the good. But there
Yes.
are some strategies where it's just better to trade it every time. Like I don't want to limit you to, you had, 200 something trades. ASD might limit you to, you probably still need the VIX thing. And then at that point, it's like, if I cut your trades in half, even if they were better, the frequency may not make as much. So you got to you got to test it, of course. But that was just kind of my initial thoughts. You'll probably get less trades. But all right, guys, I appreciate it. We'll talk to you guys soon. Okay, thanks for coming on.
All right, Eric. Have a great day, guys.
Thanks,
Thanks.
guys.
Yep.